Do you want to retire as a millionaire? Guess what? It is not an impossible dream. In fact, with the right steps, it's a dream you can turn into reality. We are living in an era where information and tools to reach financial freedom are at our fingertips. It's no longer exclusive to Wall Street gurus or those with financial degrees. Whether you're just starting your journey or are well on your way, the goal of retiring as a millionaire is achievable. So, are you ready to take the first step towards financial independence? Stay tuned as we unravel the steps to make this dream a reality. The journey to becoming a millionaire starts with a single step, and the earlier you take that step, the better. Let's dive into why starting early is vital to your financial journey. Picture this. You're setting off on a marathon, but instead of starting at the same time as everyone else, you decide to wait, to delay your start. As time ticks on, the distance between you and the other runners only grows larger. The same principle applies to investing. The sooner you start, the more time your money has to grow. And the greater the distance you can put between your current financial situation and your millionaire goal. Two key concepts to understand here are compound interest and the rule of 72. Compound interest is like a snowball rolling down a hill. It starts small, but as it rolls, it picks up more snow, growing larger and faster. That's exactly how your money works when you invest early. It grows over time, not just from the initial amount you put in, but also from the interest it earns. The result? A larger financial snowball. Now let's talk about the rule of 72. This rule is a simple way to figure out how long it will take for your money to double, given a fixed annual rate of return. You simply divide 72 by your annual rate of return. For instance, if your rate of return is 6%, your money will double in roughly 12 years. The sooner you start, the more doubling periods you have, and the larger your investment grows. Every second counts when it comes to reaching your financial goals. The earlier you start, the more you can take advantage of compound interest and the rule of 72, and the closer you get to that million-dollar finish line. Remember, time is money. The earlier you start, the more you reap. Having a plan is not enough. You need a solid investment strategy to guide you. Let's start by understanding what a solid investment strategy is. It's a well-devised plan that guides your financial decisions, based on your personal goals, risk tolerance, and investment horizon. A solid strategy is not about getting rich quick. It's about steady, long-term wealth accumulation. One of the pillars of a robust investment strategy is diversification. To put it simply, diversification is the financial equivalent of not putting all your eggs in one basket. By spreading your investments across a variety of assets, you reduce the risk of any single investment's performance drastically affecting your entire portfolio. This could mean investing in different sectors, geographical regions, or asset classes. Remember, diversification is not about maximizing returns, it's about managing risk. Another crucial aspect of a solid investment strategy is focusing on long-term investments. It's tempting to chase after the latest hot stock or the next big thing. But the reality is, building wealth takes time. Long-term investing allows you to take advantage of compound interest, which Albert Einstein famously called the eighth wonder of the world. Over time, the interest on your investments begins to earn its own interest, leading to exponential growth. Finally, let's talk about risk management. Investing always involves some level of risk. The key to managing risk is understanding it. This includes being aware of your own risk tolerance and making sure your investments align with it. Some investors might be comfortable with high-risk, high-reward investments, while others might prefer safer, more stable options. It's also important to regularly review and adjust your portfolio as needed, to ensure it stays aligned with your investment goals and risk tolerance. In short, a solid investment strategy is a well-thought-out plan that incorporates diversification, long-term investments, and risk management. It's a roadmap that guides your financial decisions, helping you navigate the ups and downs of the market on your journey to becoming a millionaire. A solid investment strategy is your roadmap to millionaire status. To grow your wealth, you have to feed it regularly. Picture this: your investment portfolio is a garden. The seeds you plant are your initial investments, the soil is your investment strategy, well-researched and carefully chosen. But without regular watering, your seeds won't flourish or bear fruit. The same principle applies to your investment portfolio. Those regular contributions, they're the water that your garden needs to grow and thrive. Now you might be thinking, how can I ensure that I'm watering my garden consistently? The answer is simple. Automate your contributions. By setting up automatic transfers from your bank account to your investment accounts, You ensure that you're regularly feeding your investments, come rain or shine. This does two things. First, it instills a positive savings habit. You're committing to regularly setting money aside for your future, and that's a habit worth cultivating. Second, it takes advantage of a concept known as dollar cost averaging. This means you're buying more shares when prices are low and fewer when prices are high, which can potentially reduce the impact of market volatility on your portfolio. But remember, it's not just about making contributions, it's about making meaningful contributions. Even small amounts can add up over time thanks to the magic of compound interest. This is where your interest earns interest, and then that interest earns more interest, and so on. It's like a snowball rolling downhill, gathering more and more snow as it goes. So, how much should you contribute? That depends on your financial situation and your retirement goals. But a good rule of thumb is to aim to save at least 10 to 15% of your pre-tax income for retirement. And if that's not feasible right now, start with what you can and aim to increase your contributions over time. In conclusion, remember this: your garden won't flourish overnight. It takes time, patience, and consistent care. The same goes for your investment portfolio. Consistency is key. Regular contributions can make a world of difference in your retirement funds. Don't put all your eggs in one basket, diversify your income. This age-old adage rings true, especially when we're talking about building wealth. To retire a millionaire, it's crucial to have not just one, but multiple streams of income. But why is that? Well, simply put, it's all about spreading risk and maximizing opportunities. If one income stream takes a hit, others can keep you afloat. Moreover, multiple income streams can significantly boost your earnings, helping you reach that coveted millionaire status much faster. So, what are some examples of these income streams? Let's delve into that. A popular income stream is investment properties. Real estate has proven to be a reliable wealth-building tool for centuries. Investment properties can provide a steady stream of income in the form of rental payments. Plus, there are tax benefits associated with real estate investments that can further enhance your earnings. Next, consider investing in businesses. This doesn't necessarily mean starting your own company from scratch, though that's certainly an option. You can also invest in existing businesses, buying shares in a company and reaping the benefits of its success. This could provide you with dividends, profit sharing, or even capital gains if you sell your shares for more than you bought them. Then there's the idea of portfolio income. This includes income from dividends, interest, royalties, and capital gains. By diversifying your investments across different assets like stocks, bonds, and mutual funds, you can create a steady flow of income that can compound over time. Remember, these are just examples. The key is to find income streams that align with your interests, skills, and financial goals. It may take time and effort to establish these income streams, but the payoff can be a comfortable, financially secure retirement. Having multiple streams of income is a surefire way to accelerate your journey to millionaire status. So don't wait. Start exploring these options today and take one step closer to your millionaire retirement. Becoming a millionaire is not a sprint. It's a marathon. It requires patience, consistency, and a well-devised strategy. So let's take a moment to reflect on the journey we've covered today. Starting early is not just a suggestion. It's a game changer in the world of investments. The power of compound interest can turn your modest savings into a substantial nest egg over time. Remember, every day counts when you're running the marathon towards $1 million. Next, we talked about developing a solid investment strategy. As we've learned, it's not just about making money, it's about preserving it too. So, diversify your portfolio, balance high-risk and low-risk investments, and always keep an eye on the market trends. We also emphasize the importance of regular contributions. This isn't a one-and-done deal. Consistent contributions to your investment accounts, even small ones, can make a huge difference over time. Think of it as watering a plant. It needs regular care to grow. Finally, we discussed the importance of multiple income streams. Relying on one income stream is like putting all your eggs in one basket. Risky and potentially damaging. Diversify your income through rental properties, dividend stocks, or side businesses. Remember, the millionaire mindset is all about creating and maintaining wealth. But remember, the journey towards becoming a millionaire is not a lonely one. Financial advisors like the ones at Smart Asset can provide valuable guidance and help you avoid common mistakes. Now it's over to you. With these steps, you are well on your way to retiring as a millionaire. Don't forget to like, comment, and subscribe for more insightful content like this. See you in the next video.